Hello everyone, welcome back to Robinhood Stock Market Watch List live group meeting. My name is Carlos, the admin of the group, and today is Sunday, August 14th. And we just kind of go over a live meeting every Sunday. I like to kind of go over basically what's going to happen ahead. A lot of people like to do meetings of what just happened in the past, and but I like to work a little differently. I mean, the past is the past, it is what it is, and but the most important thing is always looking ahead to see what's going to happen before it happens. And there's a lot that plays into that, but when it comes down to it, it's really some basic things that have a big impact on the stock market. And the most important thing that we always need to look into first is economic reports. Economic reports have a huge impact on the stock market, next to other world events that also have a big play with other countries' economies. But for the majority, though, it's more frequent that it'll be the economic reports. And there's a lot of places you can get and pull that information, but the best place for me has always been investing.com. And it's a free website, and it's a mobile application you can download to your mobile device or tablet or whatever, if I can spell it right here, investing.com. And so we want to, since we're on the website, there's going to be some pretty frequent stuff on the menu, popular things that people like to look at. Later on, we'll be able to look at the futures, but for now, we want to take a look at the economic calendar. If you're on the mobile device, should be a little calendar icon on the bottom middle area of your phone or device, and so we want to click on filters, because for now there's a bunch of gibberish there from all different countries, but we only want to focus on a couple different things. We want to clear everything once we click on filters. Once we clear everything, we want to scroll down and put a check mark under United States, and then under importance you'll see a 1 star, 2 stars, and a 3 stars. We want to put a check mark under 3 stars because what we're telling this website, the system, is to pull everything that'll have the biggest impact on the United States stock market looking ahead. So we'll click apply, and then we want to click on this week for this coming week, and you can see that the first one's going to be on Tuesday. We have the building permits for the month of July. Now we're going to see weekly reports, we'll see monthly reports, eventually we'll see quarterly reports, and then yearly reports. The more rare of a report that it is, the more of a bigger impact it'll have on the stock market for that day in time. And so that's why it's really important that we know this stuff inside and out. And it's only going to take just some time and experience, but also learning from somebody that's been doing this for a while. And so the Tuesday, August 16th, we have the building permits for the month of July that is scheduled to be released at 8:30 in the morning. And this is Eastern time. If we're looking at it on the website, it's automatically going to pick Eastern time. If you're looking at it on your mobile device, such as your phone or your tablet, whatever, it's automatically going to pull your time zone. So it's really critical that you know what time that these are going to be released, because it basically tells us if it's going to affect pre-market before the stock market opens, or will it affect the stock market after the stock market opens. And so sometimes it's both. And so that's why it's really critical that we know that on Tuesday that this report is going to affect the entire stock market system 1 hour before the stock market opens. Now, sometimes if the investors or Wall Street are pretty certain that it's going to be either bullish or bearish, you'll notice that characteristic before the report's even out. and it's very like, it's like, how do they know this, but they do. And a trick is to kind of follow the forecast. Now it works probably about 80% of the time, but sometimes there are certain things where it may do the opposite effect. And so like talking about inflation or whatever, like last week, usually when we have good positive numbers on inflation, that helps the economy to a certain degree. Once it gets too high, it's just too high, and a positive result now becomes more bearish because it's just too much, and it'll kind of have the opposite effect on the economy. So now it's time to bring it down. And normally with a lower inflation economic report, that would be bearish. But in this case, this last week, we saw bullish characteristics. We saw a massive amount of bullish characteristics. And the news companies were saying because the inflation is now cooling down. So it really, a bearish news became bullish news, or bad news became good news, so to speak. So what we're seeing with the building permits for the month of July is that the previous report for June was 1.696 million. So if it's higher, that's good, because the economy is growing and it's doing well. But if it starts to fall, if the forecast is telling us it's going to be lower, or it could be lower than the previous report, the investors in Wall Street are most likely going to be bearish. So it's a very good chance that Tuesday morning could open in the red, because this is just showing more of the economy slowing down, and so that just seems more like bearish news. And so we must anticipate that Tuesday morning, and that could easily open in the red and close in the green. We are in the bullish season. I've been telling you guys this for weeks. Since basically towards the end of June and the beginning of July, we are in the bullish season. And I've been doing this for years, and I'm used to those that want to kind of try to challenge me or argue, oh no, it's not, we still got more to go. I'm like, no, you can say that all you want, and we're in a new season. Even though the news companies aren't, they're not going to say it until it's been changed for quite a while. But the stock market cycle is the stock market cycle. It just never changes. It's just the way that it is, and stock market basically has a 6-year or a 1-year cycle, or 1 year and a 10-year cycle. So the 1 year is where every 6 months stock market goes down, next 6 months it goes up. It can kind of, some areas could be a little more or less and others, but the 10-year cycle is a pretty major one that even the majority still don't even know. But if you don't know what these economic reports are, feel free to click on them, like building permits. If we click on that, a new tab or page will open up. That way it can explain a little bit of what it is on the first paragraph, and then how it can affect the stock market in the second paragraph. So for example, the building permits measures the change in the number of new building permits issued by the government. Building permits are a key indicator of a demand in the housing market. We know that if you guys checked your Zillow reports in the last 30 days, your house is just declined most likely 1.5%. So the housing market is not looking good for the next year or a couple years. And so, however, a higher than expected reading should be taken as a positive or bullish for the US dollar or the stock market, while a lower than expected reading should be taken as a negative or bearish for the US dollar or the stock market. So there you have it. Basically is telling us what Tuesday is going to be like. And so but then we have to also factor in earnings and stuff, because big company earnings can also affect different segments of the stock market, which we'll get into next right after this. So going into Wednesday, Wednesday is going to be a very, very busy day, for not just for economic reports, but a lot of different things. But so it's going to be very, very volatile, which is also great for straddling. Not so much on days that aren't scheduled with things, but things or days that are scheduled with things would make a great ingredient for straddling both calls and puts, because it doesn't matter which direction the stock market goes. As long as it picks a direction and goes that direction significantly, it's a win-win. And so, but when you have days that's scheduled with a lot of stuff, this is perfect. And so so we have basically two economic reports that are scheduled to be released 1 hour before the stock market opens on Wednesday, August 17th. The first one is the core retail sales for the month over month for the month of July. We can see that June, which was still down quite a bit, to 1%, it is anticipated to be down even by a lot. 1%, swing, that's huge, and so it could also be even less than that. And so it doesn't look good for retail sales. And so but like I said, it's very important that you click on these, read these paragraphs, know them inside and out. After a while, when you do that, you'll just memorize them and just know what they are, because there's only so many. And so but even though we need most of these numbers to be higher, especially higher than the previous, or at least higher than the forecast, there are certain things that need to be lower, such as the crude oil inventory levels or our initial jobless claims, which is the unemployment report. The lower the better. For example, crude oil inventories, if people are driving and consuming gas and oil and flying and whatnot, that's good for the economy. They're driving, they're shopping, they're going on vacations, they're doing things. But look at the report for last week. I mean, it was up by a lot, almost 5.5 million barrels. So not only is people not driving as much, they're not flying, but we're not seeing people going on those typical vacations that they used to. They're just doing stuff locally, or going to the doing whatever. And at the same time, the U.S. is trying to do deals by trying to get more oil over here, trying to lower the cost of gas prices. Well, this is definitely going to lower our gas prices. That's for sure, because they need this number down, and the only way to do that is to start lowering. They need to start aggressively lowering gas prices, and that'll just force people to start consuming more gas and oil. They're just kind of restricting it right now, and so. But yeah, they just needed to really drop the value, and I think we're going to see more of. We could even see oil hit probably $80 by the end of this week. I would not be surprised. And so, but that'll help lower that down. So that'll be good. So overall, for now, usually when we see a big jump, a surge, or a plunge in oil inventory level swings. This was a big surge, so we should see a plunge, because normally what we've been seeing with high gas prices is that most people get paid every 2 weeks, and so on their payday they're going to their least expensive gas station, fueling up and trying to get it to last for 2 weeks. But now gas prices could be at a somewhat comfortable level, maybe for the majority, to the point where that might not matter as much. So but I would still anticipate, now there's no forecast yet, but we could see something maybe tomorrow morning during pre-market, and so that'll help kind of give us but most likely we're going to see a number that's a lot less. And so I would anticipate that this number will be a lot less, which should provide more bullish characteristics. So Tuesday we could see where we could open in the red again and then close in the green, because it looks like that the retail sales are going to be bearish, and then the crude oil inventory levels are going to be bullish. Then we have the FOMC meeting, where they usually like to talk about inflation and interest rates and stuff like that. Well, so we could get mixed. Most people are going to say this could go either way, because if they start talking about interest rates, so right now interest rates are at 2.5% federally, and which is what they were before the pandemic, before the government shut the economy down. This basically means we have another year, almost another year and a half worth of interest rate hikes. And so, but when they start talking about inflation, they should start talking about how it's cooling down and blah blah blah. But they should probably talk about, if they because the next interest rate hike is when, like I think September, and so they should start talking about having a much significantly less interest rate hike. But who knows? I mean, the last several of them have been up 0.75%. Hopefully this time it'll be, a 0.25%, because, we just got so many more to go, and it's just nuts. But a lot of people that have been in the realty business for a long time would say, oh, I remember when interest rates were 12.9%, blah, 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 back in the 80s or whatever. It's like, holy moly, it's like 12.9%. That was a 2.9%. So it's crazy, even though numbers may seem high when really, they're kind of not. But, values aren't as high, then as they were now. And so just know this Fed meeting could go either way. It just really depends on what they do, what they say, and what they kind of plan, because a lot of it will help manipulate the market to go in either direction. Hopefully, though, they go with the flow, they go with the momentum, and they make a bullish characteristic more bullish. Usually that's kind of what we normally see. So hopefully that's the plan for Wednesday. Hopefully that opens in the red, closes in the green. And then Thursday we have the unemployment report and the Philadelphia Fed Manufacturing Index report, both scheduled to be released 1 hour before the stock market opens. Though the unemployment report is the big one, because this unemployment report's been growing every single week. Normally it fluctuates. It's high. It's up 1 week, down next week, up 1 week. No, this thing's just been trickling up every single week, and it's still expected to continue to climb. And so that's not good. That would typically provide bearish characteristics, especially if it hits or passes the previous. I would definitely expect a lot of bearish characteristics, especially if it hits or passes the forecast, which is higher than the previous. That's not good. As more and more companies are downsizing their staff, this number is going to keep going up. And then after the stock market opens, 30 minutes after the stock market opens, we have the existing home sales. This is a huge one. Huge. Existing home sales is basically homes that already been built, used homes. For the month of July, the previous month was also down, to 5.12 million. It's expected to reach 4.88 million, most likely probably even less, like 4.5 million. And so that's terrible for the economy, even though the homes are twice as much as what they were. But overall, this is not good, as it's basically bearish. This is bearish news, and so it just looks like, even with the Philadelphia report being -5, this is all just bearish news. So it looks like a majority of it's going to be bearish for the week. But like I said, it could easily be manipulated by other events. We had a pretty bullish week, and but we're going to see this kind of algorithm. So you don't necessarily want to get too used to it. going, more on one side over the other. That's why I recommend doing straddling, because with volatility, it's a win-win. And so, but we have, the I guess the Tesla split coming up pretty soon. And so anytime we have a significant split, we always want to actively trade calls within 2 weeks before the split. Do not hold anything through the split. Calls or puts. If you hold calls or puts through a split, you will suffer what's called an IV crush on both calls and puts. That means implied volatility crush. It devalues both sides significantly due to some changes in the system. And so, but we want to actively trade puts for 2 weeks after the split. So it seems as though there will be a good a timing for Tesla. So as we approach, I think Tesla has their split in another week or so. I have to verify some of this dates, but 2 weeks after that, we should see a little bit of a decline. Now, normally, before 2 weeks, I'll usually see the stock rise about 20%, and then after the split, I see the stock go down 20%. Then it starts to kind of hesitate there, and then it begins to kind of recover, goes back up. So with a little bit of math, we can predict certain numbers and prices and whatnot, and so that way we can figure out where we need to be and where we need to go. And so but usually that's kind of the normal algorithm. And then Tesla has their artificial intelligence robot reveal on, I think, the last week or the last day of September. And so after the 2 weeks of downtrending after Tesla split, it'll now become an uptrend for 2 weeks before their artificial intelligence reveal. So there's a really good plan for Tesla right now, and it's exactly going to work out just the way that I mentioned. There's somebody in the chat room here. I'm going to read it. I still have some problem with the support and resistance. How do you set your support and resistance during the market? I know talked a lot about support and resistance. Please, if possible, explain. We'll go over some, moving averages, support and resistance stuff here in just a little bit. So don't worry about that. But this is the gist of the economic report, and so let's go into earnings. So every Saturday I always post a lot of stuff in our group, and a lot of these posts of mine you can find under the featured areas. So just think of featured areas as like my bookmarks. This is where you can go to see everything that I post. And so here is this week's scheduled most anticipated earnings releases. And so there's just a lot going to happen. Most of it's going to be like retail sales. And so it's funny how Walmart's already here when they had mentioned it a couple of weeks ago. They wanted to warn investors that their revenue has been significantly down. And so that's when we saw them kind of plunge. But now here we are with their earnings report. So that's a big one for this week, because they already kind of warned the public that they might not do so well. So the top 10 analysis I have posted in here, just like clockwork. We have Walmart right here on the top. So Walmart is confirmed to release their earnings report on Tuesday morning before the stock market opens. The company's earnings release has a 24% expecting an earnings beat. I don't think I've ever seen Walmart so low before. Normally it's 45, 65%, something like that, but 24%. expecting an earnings beat. Now, what's the opposite of that? That's 76% expecting an earnings miss. 76%. Okay, it's okay. We like that number better. That's 76%. It's a lot better. Now, if you're into stock options, we could buy puts. We can bet against the stock because now 76% a put is in our favor, or 24% a call is in our favor. Now, option traders are pricing in around a 4.5% price movement in either direction. Now, since Walmart had plunged not too long ago, their miss may possibly be already priced in. So we need to be cautious about that, but it'll still provide some kind of volatility. It's still going to reach some news, and it's going to be pretty volatile. Where in the past, the stock has averaged around 4.5% in recent quarters. Next is going to be Target. Now, these two are definitely going to affect each other. That's for sure. Target is confirmed to release their earnings report on Wednesday morning before the stock market opens. The company's earning release has a 35% expecting an earnings beat. This is not good. With the way the inflation's been and everything, people just can't shop. I mean, I don't know if you've noticed, but groceries seem like they're 50% more than what they were just a couple of years ago, or even, whenever. But I mean, this is, people are shopping less, and that is going to affect retail stores. And that's going to be huge this week. Option traders are pricing in around 8.8% price movement in either direction. Where lately, in recent quarters, it's been around 9.2%. Home Depot, same thing. People just, it's the summertime, and so a lot of people are doing a lot of things, barbecuing or pools and yard maintenance and stuff. And so this is always a great time of the year for Home Depot, but with the way inflation's been, it definitely affects that as well. So Home Depot is scheduled to release their earnings report on Tuesday morning before the stock market opens. The company's earning release has a 59% expecting an earnings beat, which is a lot better than those other guys. Option traders are pricing in around a 4.5% price movement, which is about average. Zim Shipping is confirmed to release their earnings report on Wednesday morning. The company's earning release has a 76% expecting an earnings beat, which is pretty good. Shipping has been pretty huge lately. The option traders are pricing in almost a 10% price movement, where in the past it's moved around 5%. Next one is Li Auto. Li Auto, which is one of those Chinese EV, electric vehicle companies, are scheduled to release their earnings report tomorrow morning before the stock market opens. The company earnings release has a 66% expecting an earnings beat, while option traders are pricing in around an 8% price movement. This will be interesting because I believe this was right around the time where China was during its own lockdown, and so that may affect their earnings. And so but we'll see how that goes, as well as with the NIU is also confirmed to release their earnings report tomorrow morning before the stock market opens. So it's definitely going to affect tomorrow morning. We're going to see some pretty volatile electric vehicle stocks, not probably just the Chinese companies, but also all the the rest of the world, including probably Tesla or Ford and whatnot, Lucid and Rivian. And so the company's earning release has a 61% expecting earnings beat. Option traders are pricing in, look at that, 22.9% price movement. Where in the past it's had a better movement around about 8 to 9%. So I wonder why option traders are so anticipating a large movement on this. Something for us to do a little bit more further research during this weekend. Next one is CC Limited is confirmed to release their earnings report on Tuesday morning before the stock market opens. The company's earning release has around a 59% expecting an earnings beat. Option traders are pricing in around a 12.5% price movement in either direction. Lowe's, very similar to the Home Depot. Those companies confirmed to release their earnings report on Wednesday morning before the stock market opens. The company's earnings release has around a 54% expecting an earnings beat. Option traders are pricing in around a 6% movement, where normally it moves around 3%. Cisco, a lot of times pictures can say 1,000 words. Cisco is, a technology company that, builds a lot of networking, and computer components and stuff, but this kind of symbolizes, cloud-based, servers and stuff, and that's a huge profitable area in the technology industry. So Cisco Systems is scheduled to release their earnings report on Wednesday after the stock market closes. The company's earnings release has a 50% expecting an earnings beat, which is not good. Option traders are pricing in around a 5.5% price movement, but it normally moves around 4%. Last but not least, John Deere is scheduled to release their earnings report Friday morning before the stock market opens. The company earnings release has a 72% expecting an earnings beat, which is a good time for John Deere. We're, like I said, been more in the spring and the summertime. You've been noticing a lot of people upgrading their equipment. A lot of farmers have. Option traders are pricing in around 5.5% price movement in either direction. It normally moves about that, so it looks like we're anticipating some average movements. And then after we do our due diligence, it's always important that we always kind of double check the top 5 things to watch in the markets ahead of the week from investing.com. This is a report that is very consistently reported every Sunday morning. Investors will get an update on the United States retail sales along the earnings results from several major retailers in the week ahead, which will be parsed for insights into the strength of consumer spending amid elevated price measures or pressures. The Federal Reserve is to release the minutes of its July meeting, which will be scrutinized for clues about the size of upcoming rate hikes, just as we talked about. The United Kingdom is to release data on employment, retail sales, and inflation, which is expected to close in on 10%. As the economy slides closer towards recession, meanwhile, central banks in New Zealand and Norway are expected to announce big rate hikes. Here's what we need to know to start our week. So a lot of times, and some of you probably already know this, we're already in recession. They won't really announce it until towards sometime in September, so next month. And usually, if you Google like what is recession, usually the response that we'll see is 2 quarterly declines in economic growth. And so it's already been confirmed that the first quarter was a decline, and the second quarter, that information slowly comes out, but it usually comes out it comes out every month, but that bit of information is based on 3 months ago. So basically, we don't get we don't get June's report until September, which is weird because that is when they'll announce, okay, yeah, second quarter was a decline. We are in recession, guys. Blah. And so even though we're in a bull market, it's still technically going to be a recession. But even though our government's politicians are saying, oh, there's more to it than just that, we're not in a recession, blah blah blah. Well, there's different types of recessions, and so, but yeah, we are in kind of the beginning stage of it, and but it's overall we're in a cycle. Like I mentioned before in our meeting, we go through a 1-year cycle where 6 months things are up, 6 months things are down. The 10-year cycle is kind of the same way, but it's more with the economy, where the economy is up, for 5 years, next 5 years things are down. And so, but every 2 years, there's certain industries where it's their time to shine, and they do really well. And so, and it just rotates. So, but you know, we can always get into that later. So, but number one, U.S. retail sales, as we talked about, that was huge. That's the biggest thing for the week. That's what's really going to, and the housing, the retail sales and the housing. Number two is going to be all the, you know, the federal meetings and everything is really going to, either it's going to scare investors or it's going to pump them up, and we're going to see, you know, some more crazy, you know, movements. And so, but yeah, we talked about the earnings. So earnings, especially retail earnings, that's going to be huge, especially with a combination of the retail sales economic reports. So it's just going to create, it's basically, we're going to pour fuel on the fire, a bearish fire for that. And so it's, but with the way the stock market was in the last week, everything was just up so high right now, and it needed to be. Things needed to be high before it can come down, and then that way it can come back up. And so, but we're starting to see this weekly algorithm. So get ready. And so the number four is the United Kingdom economic data. And then number five was the interest rate hikes. You know, what are their plans? What are they kind of foreseeing or forecasting? Is really going to you know, have a big impact on the stock market this week. And so, but let's take a look at Friday's options activity really quick. Usually we get this information from barchart.com. We'll go to barchart.com. There's options, and then the most active options. And so this information is usually live, and it does update while the stock market's open. So what we're seeing is basically at closing time of Friday, of what kind of happened, and what we're seeing is the top two. We have Tesla and Apple. Basically, these two have always been number one. Apple usually dominates it quite a bit, but Tesla looked like it was up in the lead for Friday. Buy options volume. Now, volume is always the current day's buying and selling activity. And so, and if you're not in the options or yet, you'll notice we have a call and a put. Call is betting a stock goes up, a put is to bet a stock goes down. So we now see kind of a ratio. So out of this tremendous amount of options volume, over 57% are betting that Tesla stock is going to keep going up for that day, as well as probably the next trading day, where 42% are betting against the stock, betting that it'll go down the next trading day. However, some of them are straddling both calls and puts, because on big movements like this, you could only lose what you have in one hand, but your gains in the other hand are potentially unlimited. So if you lose 100% on one hand and you just gain 500% on the other hand, that tremendous amount of gains just washed out your loss and puts you ahead. And so a lot of us that straddle will buy maybe 5 minutes before close. That way we can sell them the next day, and we can either sell them at the same time, or we can sell them at different times, so we can maximize our gains on one end and minimize our losses on the other end. Sometimes you can turn that loss into a gain, so you can gain on both ends. It just depends on you know what strategies you're doing and what you're doing, but it's really important that we do go over that support and resistance and moving averages here in just a little bit. But yeah, we see Apple's 50-50, right on the money there. 50-50, that's crazy. We never see that. Split right in half, because people absolutely love straddling, because if you're picking one direction, not the other, and the market goes the complete opposite direction, that could be catastrophic for your trade. You could, like I said, you could lose 100%. And so that's why it's extremely critical to always straddle both calls and puts. Make it a rule. Never have a call without a put. Never have a put without a call. That's got to be a rule. So AMC has been getting a lot of attention lately, as it always has ever since it's been manipulated. but it's one of those stocks within my rules is to avoid things that are heavily manipulated, like AMC, GameStop, and so on. So I'm surprised to see that it's number 3 on the list. We can see that a lot of people are buying calls, even though the stock is down. It was trickling down all Friday, and people are buying calls because this is the wrong type of buyer. These are just new people that don't know what they're doing, and they're using the hope system, hoping they can throw some money at it that it'll stick. And so that's why I do not follow this, because you get those hopeful people involved in that, and I want to see what the majority of the real investors and traders are doing. And so, like Bed Bath & Beyond, that was a pretty huge stock that we were always talking about in the last 30 days. And here it is, boom, just blasted off 21, almost 22%. And people are still buying, calls. 72% are saying that, nope, there's still more room in this thing. This thing's, got more in it. And so that's huge. So, but by looking at this, we can see a lot of activity. So even earlier in the week, ChargePoint was a lot less than this. It was up 13%. It was the call percentage ratio was like what, 90%, 95%. It was substantial. It's important we look at this stuff daily, because we can normally see what's normally on here and what's not normally on here. If we see something that's not normally on here, especially if we see a very high percentage ratio on either the calls or the put, we have to consider that unusual activity, because it's not normally on here, and it's on here for a certain reason now. And especially if it had 90% call ratio, and here it's been going up all friggin' week. It's because it was flying underneath the radar. Something could have been going on, like insider information, something where maybe it's not on the news yet, but now that it is, we can pick up on that. This is our radar. We can pick up on unusual activity, so we know we can react to it. And so Rivian's right here. They just had earnings a week ago. They didn't do very well, so they went down. But it's time for them to recover. We have 66% people buying calls on that. So it's just a lot of great stuff on this. But if we go back to the options menu, we can look at the option volume leaders, and to look at the most active individual calls and puts. But when we're looking at this on a Friday or on the weekend, like right now being Sunday, we may see some of these are going to be expired or invalid. A good way to kind of tell is either by looking at the expiration date or the DTE, which is the number of days until the option has expired. And so 0 means it's no longer valid, it's no longer usable, and so we have to go down. Now we have the charge point that we were just looking at, so which is currently at $18.87. We have a call of $21, and even if you're not in the stocks, if you're just looking, you can use this to buy shares of things, because at least you can see what people are betting a share is going to reach. So if you buy it as a share and it reaches that, you can gain 10%, 20%, 50%, 100%. And so it just depends. And so we have ChargePoint that is active right now. And so we see open interest. And if you're not in options yet, open interest is basically the total number of open option contracts that have been traded but not yet liquidated via offsetting trades, meaning that this is the number that has been previously purchased but has not been sold yet. But when we see such a low number like that, and the volume again is the current trading day's activity, we can see that this is almost pure buying activity, because if the previous amount was 900, let's say 900 people, and now we have 64,000 people that are bought into it. This is pure buying activity. That just means people absolutely believe that ChargePoint is going to keep going up, especially for Monday. And so this is great information, just more unusual buying activity, more flying underneath the radar type tactics. That's highly critical that you utilize this. And so next one is CLA. I'm not familiar with this one, but we do have a couple call strike prices that are below the share price. This is in the money. And so, which is definitely kind of unusual. We'd have to do a little bit more research on what the company is and what's kind of going on here. But it could possibly be selling activity. You know, vice versa compared to the other one. We see that the open interest is 68,000. And now we have a volume of 60,000. So this could be pure selling activity because it's less than the open interest. And so, but then again, with this one, we have, but they could have sold that, maybe bought this one because this is significantly higher, by 50% higher than its open interest. So they could have moved out of that, got into that. And so, but then we have Ford. We have a Ford put. Ford is $16.18, but people are buying up on some puts on Ford going into this coming week. Or they could maybe be selling it too, because the open interest was 200,000 and then now volume is 55,000. We have Apple. We have an Apple put here going into Monday. We have a Tesla call going into Monday, and then we have an Apple call, $175 going into Monday. So that's all looking pretty good. Now, if you're wanting to hold things longer, if you're one of those actively holding people, then you want to probably look more into the higher open interest stuff rather than day trading or swing trading if you don't like doing that, or maybe just don't have time to day trade and swing trade. You got to hold for weeks or months. So let's sort this page out by open interest by clicking on open interest. Now, when we do that, it sorts out the current page. We need to sort it out by the whole system, but because WaterChart would like you to unlock the whole list, you have to subscribe. But in this case, let's just refresh the page and it'll automatically sort out the whole entire system by the open interest. So now we see these huge open interest numbers now. So again, this is more long-term, short-term, long-term type of stock options. So we have Ford Motor Company so far as the highest open interest with a $16 put. But it's got a lot more to that though. If we want to look at Ford's, we also have a $20 call strike price that expires at the end of the year. And so even if you're looking to buy shares, if you bought it in $15, $16 and went to $20, that would have been a 30% gain. And I don't know if they're still paying dividends or not, but not only are you holding on to something that's appreciating, but you could be holding on to something that's paying you dividends every 3 months. And so just a huge accumulative volume right here. Now we have Twitter. Twitter is $44 a share with a $55 call strike price that also expires towards the end of the year. Now look at this. We have a $25 call strike price for Ford Motor Company. That's pretty strong. Now it just touched $25 right before Russia invaded Ukraine. If it can do it, then it can easily do it right now. And Ford Motor Company has a lot more to go. They're building mega factories and battery recycling. They're getting more involved in EVs and all kinds of stuff. So Ford is, and that's, as an investor, it's all about growth, with the company and the stock, and Ford has it going on right now. And so, but we're seeing a lot of trading going on, with calls and puts, but in the longer run, we're seeing calls all the way around. Then we see GameStop. Again, it's one of those manipulated ones that I highly recommend to avoid. We see GameStop at $40 right now, but we have a $237 strike price. And I've seen this before, even before the split, and it just never gets to these strike prices. And so, that's just what I would recommend, just to avoid those, because they're always going to be manipulated. Plus, they have a lot of time depreciation, time decay. So another reason why to avoid it. But look at Google right here. Google, which just did their split not too long ago, they're at $121.68. The split just happened just almost precisely the way that our normal split strategy does. And so now we have a $225 strike price. It basically doubles its value in a matter of a few years. In the beginning of 2024. And so Google has a lot of things working as well. And so just like Apple. But yeah, you can get a lot of great information from these bits of resources. And then let's switch over to Webull. I'm going to switch over to the Webull application really quick. Well, some of you guys wanted to talk about support and resistance and whatnot, which ultimately kind of comes down to the moving averages. Moving averages is not available in everything like the Robinhood application. The Robinhood application is a great application. It's very user-friendly. It's very powerful. It executes our orders very, very quickly. But it does lack some other very valuable and critical tools, such as moving averages. Moving averages helps provide us our buying and selling signals. Without them, we'd be trading blindly. And it helps provide us our buying and selling signals that are imperative to that ultimate question. Should I get in now, or should I sell? And so Apple being one of the most common traded stocks, let's take a look at Apple, and we can kind of see. I'm just going to try to move I'm just kind of stuck on a double screen here. We can see that the price line on this side here is the main green line. Once it cuts through all three of the moving average lines, I have 3 on there because that way we have like a high risk, medium risk, low risk type of situation. but once it cuts through all 3 moving average lines and the moving average lines crosses over each other, we can see that the color lines are reversed. That is our last and final signal. And a lot of times the MACD on the bottom can also provide us some signals. Some of them could be early, some of them could be late, some of them could be false, but at least it lets us know, hey, get ready, something may happen soon. And that happened right here before the lines crossed over, right when Apple was right around that $135 area or $130 area. And so but the crossed over right around $139, and here it is at $172, and so that's pretty substantial for Apple. And it's just so easy how you can just detect it, and it's easier if you're more of a short-term trader, because things don't move that it's not as volatile as we are trading throughout the day. But it's very, very popular that people like to trade, day trade and to swing trade. And so let me see if I can reset my, I don't know why. I don't know why it's glitching here. There we go. So this is Friday, and so get this switched over. Okay, so the first hour and the last hour of every market day is the most volatile part of the day, and so at a certain point we got to start off with using the 1-minute graph, but we also need to pay attention to the 5-minute graph. Once we go past the 1 hour, we need to focus more on the 5-minute graph than the 1 minute. But as we get into the power hour, the last hour of the day, then we kind of need to pay more attention to the 1-minute chart over the 5-minute chart. But it's important that we look at both, because it looks like on Friday, it looks like the 5-minute chart really was pretty dominant the most, even after opening, versus the 1 minute, after 15 minutes or so, the market kind of or even Apple kind of took a quick dive but recovered back up. So that would have maybe told us to sell and to rebuy really quick. And that's why it's important to watch more on the 5-minute chart and to make sure what's doing, especially if we are straddling. We have, let's say we just bought our calls and puts before closed on the previous day. We're looking to sell them at different times so we can maximize our gains and minimize our losses. So with pre-market, the pre-market's basically telling us that the 5-minute chart is going to provide us more of the better information to look at versus the 1-minute chart. There's just too many signals. When there's too many like that, that's what's called false signals. So we have to adjust our process a little better. So we got to jump between one over the other. So this is telling us use the 5-minute chart. So we're like, okay, so we use the 5-minute chart. So the stock market opens, the price goes down, but the moving averages doesn't cross over. So we're holding our calls and puts because we're waiting for a solid signal to sell either the calls or the puts first. And then, so the market is up, Apple is up, and pretty substantially. It was up, from open, 169, and it was up, I think, what, 1%, I think, at open. But I think it closed at like up 2%. But in the middle of the day, we kind of had a signal that could have potentially caused people to sell. And if they would have sold their calls, your calls would have substantially gained so much more than your puts, that even if you sold your calls and kept your puts, you'd still be ahead at that point. And so your puts are toast. Your calls, I mean, you did a great job, even if you're holding on or not. Or you can just sell both and be done with it. But either way, I think that's where a lot of people probably would have dumped it, or just continue hold both, and then sell your calls and puts. Get rid of everything before close, and then we have to buy back in our calls and puts. But people always ask, what strike price? What expiration date? Well, when it comes to straddling, the soonest expiration date is the best way, because it provides more volatility, and more volatility will create a more significant movement where maybe we'll lose 100% on one and gain 500% in the other. If you select a higher expiration, a later expiration date, you might lose like 10% on one and maybe gain 20% on the other. And so we need bigger numbers. We need bigger swings. We need to gain that 100, 200, 300%. Not gain 10, 20%. And so that's why it's important that we try to select a sooner expiration date, whether it's a week or a couple of weeks out. And for strike price, it's important that we always select the strike price that is at the money, or considered the share price, or right around it, like within 1%. If we select a strike price that is over by 2, 3, 5, 10%, you're going to suffer more time depreciation, and we don't want that. And so we want the least amount of time depreciation as much as possible. We also want what other people are trading too. We want volume and open interest and stuff. We don't want to look into something that doesn't have any activity. But it's really critical that we utilize these moving averages. And when I had discovered these many years ago, I felt like I had discovered a gold mine. I was like, this is huge. This is the foundation of every successful investor and trader's part of their strategy, because it provides these important buying and selling signals. And so if you want to get different results, you have to try something different. If you're doing the same thing, you're just going to get the same results. And so when I wanted to master this, I knew that I needed to master it quick. I needed to do it fast and efficiently, but I didn't really want to practice these moving averages while the stock market was open. To me, the stock market was like the Super Bowl. It was like game time. It was time to kick butt, not really to practice. So, but in my state, cryptocurrency is available, and I decided because cryptocurrency has unlimited day trades, it has no limitations or restrictions. It's open on holidays, it's open on the weekends, Saturdays, Sundays. It's basically open when the stock market's not, and so I can utilize moving averages and trade off of them. And I can trade $1, I can trade $10, $100, $1,000, $10,000. It doesn't matter. And so, but when we're trading with real money, it still has that emotional effect on you, which the emotion part is something we have to learn to control. But because cryptocurrency moves very slowly, it's unlike the stock market is very volatile because it has an open and a close. People are always in a hurry to get in, get out, whatnot. The cryptocurrency seems like it usually provides a signal about every hour, a buy signal, and then a sell signal about every hour. And so we can learn to trade it. We can use $1 or $10 or whatever, and that way it still has that emotional effect on you, and that way you're still practicing when to get in, when to get out, adjusting your times accordingly to the movements and stuff. That way you can practice. That way when the stock market's open, it's game time. It's time to make some money at that point, not to practice. But overall though, all it takes is confidence. The more confident that you are, the more of a better trader that you'll become. And the only way to be more confident is by having more experience. And the more experience that you have, the more confident that you're going to be, and the more of a better trader that you're going to be. And the only way to do that is by putting more time into it. The more time you have, the more you'll have all that other stuff. And the best way that I felt that I could do that is by trading cryptocurrency on the weekends. So that way when the stock market was open, I was ready to go. I was all warmed up, and it worked. And so I highly recommend doing this if you haven't already. So anybody have any questions, comments, or anything you wanted to go over, feel free to chat in the chat room here, or you can unmute your mic, and that way you can voice talk. Any questions? If you don't, I'm assuming everything makes sense. You guys are ready to rock and roll.